Now, two strong economic numbers with 6 days to go before Election Day. US growth, 2.8% in the third quarter. That was slightly below expectations. Still, it showed consumer spending remains robust, and it's a solid number. And then data from payroll services firm ADP showed companies added 233,000 jobs in October. That's the highest number since July of last year. And it all comes as inflation continues to slow, leading many economists to declare a historic economic soft landing. Nela Richardson is the chief economist at ADP, and she joins us now. At the core of what we saw in the growth numbers today, and admittedly they're backward looking, was the strength of the consumer, Nela, and that directly ties to the resilience in the jobs market. And again, almost what we could take away from your numbers today was an acceleration in job gains net. Talk us through the numbers.
Yes, so we saw 233,000 private sector jobs in October. And this was a month that was expected to be messy because of the twin hurricanes in the United States. We saw something very clear. After a summer of malaise in terms of hiring, September and October has signaled growing strength in US labor job gains. And that's good news because, as you rightly point out, the labor market is critical for consumer spending, and it really feeds those strong consumer numbers that we also saw in the GDP report today.
Now, the Fed has told us all the way along now for the last couple of months that the focus now is on jobs and preventing any further deterioration in the jobs market relative to the concerns that they had up until that point about rising prices and pricing pressures. But we do have to keep an eye on wage pressures. And that was one of the other takeaways I got from your report, was actually we saw a slowdown in the rate of pace of wages as well, which may not be great for workers, but it is a good sign on the inflationary front too.
Right. That is something that is a good news for anyone who's concerned about inflation, both for job stayers, people who kept the same job over the year, and job changers. We saw this reduction in pay growth. Now, for those who are workers like myself, who like to see their pay go up, the cheerful news here is when you match that with inflation, which we also saw from the government numbers came down again today. So what we're seeing is real wage growth, even if nominal wages and the growth is slowing. And that's cheering news for workers as well.
Oh, I'm so glad you mentioned that, because we were just showing, while you were talking there on the screen, some data from Moody's Analytics. And they said recently that the typical US household is spending $1,120 more per month to buy the same goods and services as January 2021. But then they did the sort of sticker shock offset by the fact that the typical household's also making $1,193 more per month than January of 2021. So I guess the message there is, as bad as the price pressures have been, wages are now catching up and have almost surpassed at least average wage gains. Nela, that is important. Why is it not yet really and fundamentally reflected in data like consumer confidence, for example? Because that's been one of the head scratchers of this presidential campaign.
I think the reason why it hasn't translated yet is that people are still catching up, frankly.
Yeah.
It's great that we see that real wage gain now, but we haven't seen it the entire 4 years since the pandemic. And in fact, there was at least a solid year or more where wages were retreating, where real wages weren't growing, and inflation was so high. And so if you look at the average American or people at below the median in terms of pay gains, they're still struggling with higher prices, and that sentiment can't be discounted. So in aggregate, things look great, but everything depends on your household situation. That's why I think that sentiment is coming down, and you're seeing that sentiment a little more downbeat than the economic numbers would suggest.
Yes, as an economist, I avoid the word aggregate at all costs because it just comes down to the individual, to your point, and how an individual household in particular is feeling. Nela, very quickly, Federal Reserve, we've got their meeting next week. We obviously have a December decision as well. Is the data so far, and again, I reiterate some of it's backward looking, consistent still with a further 0.25 percentage point rate cut for the November meeting and perhaps in December, or is that more of a question mark now?
I think the Federal Reserve has some discretion here. It really depends on how fast that committee wants to get the interest rates back to that neutral level that doesn't sway the economy either way. And I think they're going to have a lot of latitude in this decision because the economic data has been so good. So there's no panic response that's needed by the Fed. It's probably consistent with a moderate pace in terms of the decline in interest rate cuts. What's great about the labor market now is that it's broadly resilient. We saw growth in all sectors except for manufacturing. I have to note that manufacturing is most sensitive to interest rates. So the Fed has reason to cut again when they meet next month, but they don't have to.
Yeah, it's a fortunate position to be in, I think. Quite incredible execution for a lot of criticism in the early stages as well. Nela, great to have you. Thank you. Nela Richardson there. Now,